Hey guys, what's up, how's it going? Robin here, welcome back to another video on the channel. In today's video, I'm going to be showing you guys the Canadian stocks that I'm going to be buying for my dividend-based portfolio. So if you guys are brand new to the channel, this is the dividend portfolio that I've basically been building out since January 2020, and I've kind of been doing this video series where every single couple of days or so and once or twice a week, I basically go inside my portfolio, I give you guys an update, and I show you guys what kind of stocks I'm buying, and I show you guys like my goals and whatnot, my overall purpose of doing this portfolio. So I've been doing these videos for quite a while now. Once again, I started them completely from scratch in January 2020 of this year, and I've basically been doing them all the way today. So it's been about 11 months of dividend investing, and we've managed to grow the portfolio completely from scratch. If you guys want to watch the older videos, I'll link to the playlist in the description's video, so check that out if you guys want to watch some more videos. But other than that, we're going to jump inside the portfolio in just a second. But before we do, I just want to say, if you guys enjoyed this video, please give it a big thumbs up, and remember to subscribe to the channel if you guys want to see more Canadian-based dividend investing content. Alright, so the first thing we're going to do is I'm going to give you guys an update on the portfolio and how my stocks are performing. So let's jump inside my Wealth Silver Trade account and let's see how our portfolio has been performing over the past couple weeks. Alright guys, what's up, how's it going? We're inside the portfolio really quickly here, so I'll give you guys a quick little update on how my portfolio has been doing, and then I'm going to jump inside the portfolios individually on the Wealth Silver Trade desktop app. I'm going to show you guys the individual stocks and how the individual stocks have been performing, and then I'm going to show you guys the stock that I'm going to be buying for this week, and then I'll give you guys an update on all the earnings that the portfolio has given us since we first started the portfolio. So be a bit of a long video, but just stay tuned if you guys want to see all that kind of stuff here. So first thing we're going to do is check out the portfolio the past couple days. So over the past day, our Canadian-based dividend portfolio, so we have two portfolios here that we use. We have Canadian dividend stocks and US stock portfolio. It's predominantly Canadian stocks, but there is a little bit of US stocks mixed in here. This is going to be the first portfolio we're going to talk about, and the second one is my REIT portfolio, which is 100% Canadian REITs. So this is our dividend stocks right here, and as you guys can see, we have a total of $7,201, and we're up 0.73% today. The market's just opened about half an hour ago. It's 10 a.m. on the 23rd of November. So as you guys can see, the market's just opened, and we're already up about 0.73% overall in the portfolio. In the past week, for this particular portfolio, we were up 2%. So Canadian stocks have risen up quite a bit. Canadian and US dividend-based stocks have risen up quite a bit in the past week for 2%, which is pretty sweet. And over the past month, it's been absolutely crazy. As you guys are probably aware of your own portfolios and whatnot, we are up 7.36%, which is almost $500 in the past month, which is absolutely crazy. In the past 3 months, we're up 5%, and then all-time high for this portfolio is about 7.3%. So we gained pretty much all of our gains in the past month. Keep in mind the portfolio, we did have this portfolio before the market crash. As you guys can see, this portfolio is rising up. We dipped down in March, and then it's kind of been up and down, up and down, up and down, but I've been steadily contributing to it since then. So a lot of these stocks have been growing over time. And we'll check out the REIT portfolio really quickly here, because REITs are doing absolutely crazy right now, as I'm sure you guys are well aware. So over the past day, it looks like our REITs have run up quite a bit too, 0.8% in the past day. So REITs they might like level down towards the end of the day, but overall they've been going up. In the past week, up 2.27%. So once again, REITs, just like Canadian stocks, are going up. Over the past month, we're up 15, almost 16%, which is absolutely crazy. $670. I wish I had more money in REITs, but you know, it is what it is. I'm not going to complain either way. In the past 3 months, we are up 17% once again. Then all time on the REITs were almost up 19%. And we started this portfolio, I think it was in March, so it might have been just after the crash happened or just before kind of thing. So this is why this portfolio is kind of like, if you compare it to the dividend stocks, it looks a lot better. It's because we didn't have as much in before the crash happened, so there's nothing really holding the returns back, so to speak. It's all just mostly profit. So that's what happens when you invest during a market crash. So other than that, guys, that's the two portfolios. So let's jump into the Wealth Silver Trade desktop app, and let's look at some of the individual holdings inside these portfolios. So like I mentioned a couple times already, guys, the Wealth Silver Trade app is currently available to only some people who use the platform, and the app is slowly being rolled out to new people. So if you guys use Wealth Silver Trade and you don't have the desktop app, just send an email to support. Maybe they'll give you access, or maybe they'll give you an idea on when you can expect to have access. But I do have access to Wealth Silver Trade desktop app, and we're going to use it for this part of the video just because it's easier to see individual stocks and whatnot. So if we take the two portfolios and we add them together, we have $12,159, and you can see the individual performances here on the tab. And we're going to check out the TFSA first. We'll check out the TFSA stocks, which is my dividend stocks, and then we'll go over these really quickly, and I'll show you guys the returns, and then I'll show you guys the stock I'm going to be buying for this week. And if you guys watched my previous video, where I did a video on my top 3 undervalued Canadian stocks, It's one of those stocks, so just give you a little hint there, if you guys remember from that video. So anyways, we have Algonquin Power Utilities being the first company that we have inside this portfolio. I bought this company because it has amazing growth, a good steady growth, good dividend growth. It's all around doing really, really good. Since buying it, it hasn't done well, but that's because it's kind of sitting at all-time highs. So, you know, it's going to go up and down over the next little while. I'm not too worried about that. Enbridge, we bought Enbridge once again. Enbridge has been going down quite a bit. I haven't bought too much Enbridge because I do have it in a main ETF inside this portfolio once again. In fact, I probably will sell the individual shares once they go up a bit, but we'll just hold on to them for now because I do have them once again in the main ETF inside this portfolio. Next up, we have Fortis. This is another good defensive utility company, very similar to Algonquin Power and Utilities, where it's just like a good stock that has just had tremendous growth over the past couple of years, tremendous dividend increases, and just over time tends to do well. So that's why we're holding that. Next up we have is Manulife. We have 19 shares of Manulife. We were up 10% with Manulife. Manulife is a very, very underrated stock. It is in my last video. I did a video on it, and I think it's very, very good potential. It's got a very good dividend yield still, and it's still down quite a bit over year to year. So I think that actually might be the stock I'm going to be buying for today. Next up, we have Polaris Infrastructure. I bought this back in the day, basically waiting till it goes up a little bit more, and then I'll probably just sell it and move it into something else. Next up, we have TransAlta Renewables, another really, really good power renewable based company kind of thing. They're up 17%. They've done really well for me. A really good company to invest into. They are at all-time highs right now, but they are like a growing company. So I still think over the the next couple of years, there'll probably be like a good long-term buy to put a little bit of money inside your portfolio. Next up, we have Savaria Corp. Interesting enough, Savaria Corp is actually down quite a bit. It was one of those stocks that shot up at the start of the pandemic because everybody was like, healthcare kind of thing. And I think going into the future, they probably will recover and do well, but they kind of lost a lot of that value that they gained kind of thing, right? As the markets kind of started to kind of catch up and, bounce out kind of thing. So we'll have to wait and see how Savaria Corp does going in the future. I haven't bought too many shares since then. But I think going into the future, in fact, I did buy most of the shares when they were kind of higher priced. So I still think it's a good stock, but I don't know if I'm going to be buying a lot of individual shares of it. Next up, we have Shaw. Shaw is kind of iffy. It's a good steady dividend stock. It's got a nice dividend yield about like 5 or 6% or something like that. It pays a monthly dividend, which is nice, and it is consistent to some degree. But I do think going in the future, some of these like TELUS and stuff like that might be better telecom-based companies. I'd like to get you guys' opinion on that. What do you guys think of Shaw? Do you think Shaw is a good stock to buy right now? What do you think in comparison to like TELUS or Rogers and stuff like that? I like TELUS. I think TELUS is looking a little bit more promising, but nonetheless, Shaw has had a good history. So just let me know what you guys think about. Next up, we have TELUS. I own some individual shares about TELUS. I'm starting to kind of grow because I think TELUS has a lot of potential to grow in the future. It's also one of the best telecom companies and the biggest ones in Canada. So I think, once again, it's just going to do well long-term kind of thing. TD, my favorite bank stock, my favorite Canadian bank stock. We have 14 shares, as you guys can see. We're up 9.67%, so it's still undervalued. It is one of the good undervalued stock right now, so definitely worth picking up. And then we have VDY here, which is the overall Canadian high dividend yield index. It's got a lot of these individual stocks, but it's got a lot of like a lot of the Canadian banks, a lot of the utility companies, those well-known Canadian dividend-based companies. And we are currently up 7%, which is awesome to see. And it's still down quite a bit. Like VDY is still down, I think, year to year. About 8%. So there's still lots of gains there, I feel, so that we're just going to keep buying in and whatnot. We've been buying it since throughout the whole entire year. So it's been doing quite well. And then we have VYM, which is our US-based index with a couple US stocks. I want to add more to this in the future. Currently up 6.37%. And then at the bottom here, we have some ETFs I bought in the past, but I'm no longer really buying, so I don't really go over them too much. I'm just kind of letting them sit there, and they can, get some gains if they want, or they can, do their thing. I'm just kind of ignoring them for now. We do have XHD, which was a Canadian hedged US dividend fund, which actually has some US stocks, but once again, I'm moving away from it because I don't like the Canadian hedge thing. I kind of prefer VYM, which also has a lot lower fees as well. So that's really cool. I think I'm kind of going to move away from that. But the stock I'm going to be buying today, guys, is like I mentioned earlier, it's going to be Manulife, because Manulife is super underrated right now. If you go over the 1 year return, once again, check out my last video. I talked about Manulife a little bit, and I talked about some of these underrated stocks or undervalued stocks that I think have tons of growth. As you guys can see, still down 17% over the past year, and our current gain is about 10%. I still think there's tons of room for performance. And if we look at their earnings, have been really, really well since the pandemic. They've recovered quite well. I'm just going to look at the the dividend really quickly here. It should pop up on Google here. And it is a 5% dividend yield still. So still really, really good dividend yield. And it's got like good growth since the pandemic, like a nice slow but steady growth, which is nice to see. So we can keep buying in on a regular basis as the price goes up and whatnot. So we're up 10.8%, 10.58%. We have $411 of value, and it's about 5% of my portfolio. I'd like to add a little bit more. So we have $100 to spend today. So, yeah, we'll probably buy about, how much is the price? $21. We might be able to buy 4 shares. Let's try 4 shares. Maybe 5. 5 would be 108. And I know some of you guys were talking about a marketing limits and whatnot. I don't know, like I'm thinking about doing them, but the problem, I mean, limit buys, but the problem with it is like, what if the stock doesn't go down? I guess I could check it like tomorrow and see if it doesn't go through. I could just reduce it if I want, kind of thing. So let's try a limit buy. Let's try, what would be a good limit buy? Let's see. It's 21.67. Let's say like 21.50. Let's try that and see if that goes through, and then we can start to do some of these market buys. And I'll check tomorrow. If it doesn't go through, then I'll just buy whatever price it is. But I think that'd be interesting to kind of start doing it. Some of you guys have been mentioned to try that out, kind of thing. And I think it'd be cool to try out. So we want 1, 2, 3, 4, 5. I said, yeah, 5 looks pretty good. So we'll buy 5 shares of Manulife. Stick that order through, and we'll see if the market dips. If it doesn't dip by the end of the day, I'm just gonna buy it tomorrow. And then that's the only problem I have with limit buys. But we'll see how it works, kind of thing. I mean, the markets are going up and down, so it does make a lot of sense. But other than that, let's go back into the REIT portfolio. Let's check out the REITs. I'll show you guys how the REITs have been doing, because as you guys can see, they're up like 19, almost 20% right now. So our best performing REIT was BPY. Was up 35%. Looks like HR REIT is now 41%, almost 50%. Absolutely crazy. So BPY is up $124, 35%. We have 23 shares of that. Dream Industrial REITs, we have 5 shares of that, up 12%. H&R REIT, this is one of my biggest REITs, one of my most undervalued REITs. I might do a video on this going in the future. I think, everything I talked about undervalued dividend stocks in the last video applies to this REIT. I think this REIT is in a perfect condition to grow. Same with RioCan. But as you guys can see here, like 41% for H&R REIT. And year to year, it's still down 34%. Still down 34%. Absolutely crazy. So yeah, yeah. RioCan up 15%. So they've had a nice little increase. They've spiked up quite a bit. I'm still going to keep buying RioCan because once again they're down 34% year to year. But like investing in those dips and stuff and getting those dividends and reinvesting, it just allows you to get so much. Like 41%, 15%. That's absolutely crazy numbers in 1 year. RIT was a REIT ETF I bought way back in the day. It's up 12%. And then we have some ETFs at the bottom here. Some of them I buy, some of them I don't. VRE is one of the main ones. Same with XRE, even though they're almost the same. I'm going to swap one out to the other because I think VRE has a cheaper fee price. I'm going to have to double check that. And I think it's most of the same holdings. I'm going to have to double check, but I think it's almost the same. So I might swap to one of these. But once again, they're doing okay. Up 13%, up 7%, not going to complain. And they still have a long ways to go to because they're down overall. Because the market overall is still down quite a bit. So I just want to give you guys a quick little update on that. So let's jump inside my spreadsheet and I'll show you guys my dividend income from this portfolio. And we'll kind of tie up the end of the video there. Alright, so here's the good old fashioned dividend income spreadsheet. I haven't updated the contributions for November, so just keep in mind my contribution for November I think it's kind of sitting around $600 to $700 right now. So it's starting to rise back up, but just kind of keep that in mind. If you guys have any questions about this, let me know. But this is basically my dividend income from the portfolio as it's been growing it out, and this includes my REIT and my dividend stocks, of course. As you guys can see, we started this portfolio in January 2020. We put in $400 in January, and then in February you put another $400, and you can just see the income slowly start growing. In March we doubled down to $800. Once again you can see that little jump, and then once again in April jump, and you can just see it kept growing. $12, $19, $21, $23, and we just kept reinvesting this over time. It just keeps growing the portfolio, and our total income and dividends for the portfolio is $182. But as you guys can see, like, stock appreciation is huge too. Normally stock appreciation wouldn't be super big, but obviously this year is an exception. And keep in mind, I am investing in good valuable dividend stocks that also don't get dividend income but also get stock appreciation. Now, that's my big thing. Like, a lot of people will buy, like, dividend stocks that have like high yields, and they'll get like they look at like, so, want to get 8% yield or something like that, and that's cool and all, but like a lot of those stocks don't have a lot of appreciation. I like to focus on companies that have appreciation with good, decent dividend yields. But now with the pandemic happening and pushing all the stock prices down, there's some amazing companies with super high sustainable dividend yields that are also going to grow over time. And like I mentioned earlier, Manulife is one of those companies. It's a company that has good earnings, good growth. It's down a lot, and its dividend yield is super stable. And like the buy that in even at 5% is absolutely crazy, especially for long time gains. It's absolutely crazy. So that's kind of like my way of doing it. And you'll see that the dividend income will grow, but also we'll get that nice stock appreciation as well. So yeah, but I just wanted to show you guys his income report, because like dividends is like easier to track because stock appreciation goes up and down all the time. But anyways, if you guys have any questions about this spreadsheet, let me know. I do need to update it towards the end of the month, and we are approaching the end of the month, so we should get a bunch more dividends coming in. I'm not too sure how much to expect, but they should start rolling in towards maybe next week or the end of next week kind of thing. But other than that, guys, I hope you guys enjoyed this video. Please let me know what you guys think in the comments. Like I mentioned earlier, I did a video a couple days ago talking about my top 3 undervalued Canadian stocks. Check that video out if you guys missed it. I'll put it in end screen. You guys can click on that if you guys want to check out that video. But other than that, guys, thanks for watching. I hope you guys enjoyed the video. Be sure to give it a big thumbs up if you enjoyed it. And remember to subscribe to the channel if you guys want to follow alongside with me as I invest in Canadian-based dividend and growth stocks. So let me know what you guys think in the comments. Thanks for watching, guys. I'll see you guys later, and take care.